Hey, good morning. This is Mayor Valensky with Driving Markets. Don't forget, I've got a book on Amazon, How to Set Up a Successful Business. I'm writing another book, one now on trading. Probably be aimed for beginners more than the advanced trader, but keep an eye on that. That will come out hopefully soon. Just rearranging my microphone. Okay, so let's kick off. Jerome Powell. So Jerome Powell's meeting with all the other central bankers in Poland, Cerner in Poland. So you've got Jerome Powell, you've got Christine Lagarde of the ECB, you've got Andrew Bailey of the Bank of England, and you've got all the other personalities meeting in Portugal to discuss everything regarding world economics, regarding inflation, regarding interest rates, etc. Now, Jerome Powell got up and spoke, and he mentioned that, or he stated that there's going to be further restrictions. So why can't you just say basic language? There's going to be more interest rate rises. What does it mean there's going to be more restrictions? At the moment, the markets are priced in 2 interest rate rises in the US throughout 2023. So you're looking at rates of a 5.5% rate in the US, a 25% basis point rise and another 25% basis point rise. But because he said further restrictions, I'm of the opinion that we're going to be looking at 6% interest rates by 2024. It's a long shot, and most people will not agree with me, but many people have not agreed with me in the past, and I think we're looking at 6% interest rates in the US. It's as if giving a warning shot, but the language he's using is further restrictions. Now, the Fed effectively already has destroyed the US economy. The US economy is made up of the small businessman. It's not made up of Meta, Facebook, Amazon, Netflix, Google, Tesla. Those are just mega companies that are quoted on the US stock market and do their business elsewhere. We're talking about the regular small US businessman who does his business in the States. His customers are American. His customers are local. He is being decimated by the Fed's approach to interest rate rises. What they need to do is cut down the cost, government cost, dramatically to make it more balanced. In addition to that, by cutting costs and pulling money in, they're going to also battle inflation. The other thing that's going to take down inflation, which is an unfortunate characteristic, is going to be unemployment. As unemployment rises in the US, then what you're going to have is you're going to have naturally inflation coming down. And once unemployment rises, then you're going to see a downturn in the stock market. Now, I don't want to use too dramatic language, but a crash is what we're talking about. Yes, we're talking about a US stock market and global stock market crash. Overpriced, overvalued, hyperinflated, no reason what to be there, and yet the markets continue moving up. As far as the Europeans are concerned, they're in a worse situation than the US. So the ECB, or the European Central Bank, owes a ton of money. They're going to have to print a load of money to get themselves out of this situation. The Bundesbank's on the verge of going bust. Who would have thought of it? They've got 650 billion euros in bad debt or debt, and they're not going to have enough money to pay all of that debt after printing a load of money from 2010 onwards. They've now got themselves into a pickle. Remember, it was a short-term rescue plan. It was a short-term solution to a long-term problem. And now they've woken up and they've got to pay all this debt. So Germany's also going bust. Not only is it a recession, it could go into a depression as far as Germany is concerned. UK is not much better. UK is just slightly above a recession technical. The numbers are out today regarding GDP, gross domestic product, in the UK. No doubt, I think they're going to go negative, but that's anyone's guess. UK is going into a recession. So you've got the UK going into recession, you've got Europe going into recession, and you've got America going into recession. What's not going into recession is Japan. Japan has woken up and for the first time in 20 years is now on a very much of a bull market. Why? Because they've got looser monetary policy there, got low interest rates and low inflation. They've got all the characteristics and all the ingredients of making a successful run of the economy, which contradicts what the West is going through. So Southeast Asia, we're talking about Japan now, is going through a little bit of a bull market, bit of a boom. China. So there's going to be further regulation and restriction on exports of AI, ChatGPT, semiconductors to China. China's already in a pretty much shocking state. Property market has been decimated completely. You've also got overall the economy has not managed to come out of where it was pre-pandemic. There was a little bit of a jump, a boost after they opened up from their lockdowns, but they've not managed to maintain that jump in the pace of growth. As a result of that, they've stumbled and now it's paused and they're not too sure where to go. So they're probably going to pump in hundreds of billions of stimulus package into the Chinese economy. Chinese economy is heading south, just to be aware of that. What else have we got? US dollar yesterday slightly stronger. Why? On the back of Jerome Powell. By Jerome Powell saying there's going to be further restrictions. That means higher interest rates. Therefore, the dollar becomes more attractive in the foreign exchange markets. Interestingly enough, Tesla moved up from 240. Remember I said Tesla's going to go down to 180 to the 200 level. It's moved up to 257, 258. And a very close follower of mine, Jimmy, who finds that 99% of the things I say is wrong. He's bought or buying into Tesla, bought into Tesla, and it's running at 257, 258. It's going to go down to 180 to $200. That is my view. So I'm not talking about a day trade or a week trade. I'm talking about over the next 2 months, more of a swing trade when it comes to Tesla. High-tech sector, well overvalued. I've said that many, many times. Gold is an interesting one. Gold's hovering around the 1,915 level, could move up. Property prices. Now, property prices are rock steady in the US due to lack of inventory, lack of supply. Once that supply is solved, the problem solved, or unemployment rises, you're going to see property fall. So I'm still of the view that property prices are going to fall significantly. I spoke to someone yesterday that thought 25% in London is too high. I'm saying today you can get a 10% negotiation when you come to buy a property. So you could get 20%, 25% overall in the next 12 to 18 months. Remember, property lags the rest of the market. So you can keep an eye on that property. And I've got a book on Amazon you can take up, writing another book, as I said. You can share, subscribe, follow me on Instagram. Happy to hear what your comments are. You can direct message me. I'm also taking on mentorship. So those people who want to have any sort of input from my experience, I'm more than happy to help. All right, this is Mayor Walensky with Driving Markets. Have a good day.